Welcome back to Market on Close. I'm Caroline Woods. It's time to gauge current market sentiment. Let's welcome in John Barr, manager of the Needham Aggressive Growth Fund. He joins me here at the desk. John, great to have you here.
Great to be here, Caroline. Thanks.
So first, I want to get your thoughts on this market. John, Kevin Hinks was here at the top, or was on at the top of the show, kind of called it a dry powder day. Not a whole lot of action, just seeing some strength in big tech. What's your view on this this really impressive comeback that we've seen at this point? S&P 500 positive now for 2025.
Yeah. So my fund, the Needham Aggressive Growth Fund, invests in companies for a long period of time. So our average holding period is 10 years. We're not very focused on the macro. We're very focused on the micro for our companies. But you are absolutely right. When the Liberation Day tariffs came down, boy, sentiment was awful. And we actually did some work to think about that and put it in context and concluded, I can't figure this out, and we better just focus on our companies. And we're one tweet away from the market recovering, and it has done that.
But we're also one tweet away from potentially seeing weakness as well. So
right.
I think that's sort of the big question is how do you navigate the volatility? Obviously, when you have a very long-term horizon, it doesn't matter quite as much. But when you look at the current market rally and the fundamental landscape, do you think that this is something that's sustainable at this point?
Well, in our small cap world, we still think there are plenty of values out there. I won't speak to the Mag 7 or the larger caps, but for small caps, there's always something to do, and in particular now.
So you're the manager of the Aggressive Growth Fund, you mentioned. So tell me about where you're finding aggressive growth and how you can even think about companies over the next 10 years when really just the past couple years has been a totally different narrative, especially when it comes to AI. Things that we weren't talking about a couple years ago became front and center, and then obviously tariffs kind of replaced them for quite some time.
Right, so we try to look beyond the typical Wall Street model of 12 to 18 months to get a 2 to 3 year view on something new that a company is doing. But unlike many growth managers, we also look for companies that have an established business. So if they combine those two characteristics, our downside can be limited while we can capture the upside from the new thing that's coming about. And so if you look beyond if you just assume that everything is going to be all right in a 5-year time horizon, then we don't worry so much about the tweet up or the tweet down.
Yeah, 5 years, we could have totally new problems. So
right.
This
and
might all be right.
We
right.
will. We have and we will.
Those calls for recession, people have been pounding the table for, some since 2022. Eventually they will be right. Eventually this economy will be in a recession. But talk to us about where you're finding some of these aggressive growth opportunities at this point.
Yeah, so the area that we've been focused on for really, I've now had the fund for 15 years, is on infrastructure broadly defined. So it's some physical infrastructure. It's also technology infrastructure, such as data centers and semiconductor manufacturing. And in 2017, Amazon started to build out the data centers, and this started to take off and was less cyclical growth. And then came AI. And that has supercharged it. So we think we're still in the early stages of AI, but many of the stocks are pretty well known at this point. Mm-hmm. So where I've focused the new investments in the last year and a half, many have been in the architecture, engineering, and construction side of it affects broadly, but they do construction for data centers, for semiconductors, and for the critical infrastructure that we need.
Can you give us some of the names of your biggest holdings there?
Well, tying right back into yesterday's news with the president in Saudi Arabia, they announced 4 companies that were working on the airport in Riyadh, and 2 of them happen to be our holdings. So one is Jacobs Solutions, which is a large technical consulting and construction company, and the second is Parsons Corporation, which does more specific work on airports. And so 2 of the 4 that they mentioned are in the portfolio.
So AI, kind of the picks and shovels, the infrastructure will continue to be front and center in your mind. Anything that would surprise us in terms of where else you could see opportunity for aggressive growth that might not be as on our radars quite yet?
Yeah, so taking that architecture, engineering, and construction to the try to look behind it. Last year we invested in the 2 skilled labor trade school companies that are public, and one being Universal Technical Institute and the second being Lincoln Tech. And these schools are doing training for HVAC, electrical, automotive, and additive manufacturing, aerospace, and other skilled labor positions. And there's not enough workers to fill the jobs that are needed. The graduates are placed. They're great paying jobs, and these are 2 companies that are not well known that we invested in last year that I think have great growth characteristics.
What's your view on some of the more well-known companies that we talk about every day? NVIDIA back in favor, AMD back in favor, and actually having quite a great run. Not even just the Mag 7 though. Some of the server makers like Supermicro. I mean, some of these names that have seen really impressive runs. Do you expect aggressive growth to continue with those names?
So we own some of those. We've owned Supermicro since 2009. No one knew about it for most of that time period. It was shortly after the IPO, so it's an example of one of our long-term holdings. And I think they were also mentioned in the announcements from Saudi yesterday with DataVolt, the data center
sizable
company.
Deal there.
Right. And we think we're very early in the rollout, first inning, perhaps. And another company along those lines is Vertiv. And Vertiv does the electrical and thermal control for data centers. And it was a spin out from Emerson Electric. And it's been a great performer for us. But the world has sort of knows about those 2. We're looking for the small caps that they haven't quite figured out yet.
And any Mag 7 on your watch list? Do you own any of the Mag 7? Because when we talk about value, some of those names did see pretty sizable declines this year.
Yes, and the fund is a small cap fund, but because we hold for a long time, some of these companies can grow to be quite large, and one of them is Apple. So we bought Apple in 2006 and still hold a good bit of that stock today. And as you say, I think it is very attractively valued.
So just final thoughts or final really advice for investors who want to try to find the next big thing, or maybe have some FOMO that they missed out on some of the wild ride that we've seen for some of these AI stocks. As someone who's been in this a long time and has ridden probably some pretty wild rides yourself, especially with names like Supermicro, what's your advice as investors try to find these next opportunities?
I'm a big fan of Peter Lynch, and invest in what you know. Take what you've learned in your business, in your career, and no matter what it is, you know something about an industry or companies that the professional investors don't know, and use that as the base for what you're interested in investing. And don't trade. Just find something that you really know and like and own it for a long time.
Although a lot of traders on this network as well, but if you're thinking long-term investing, different story, right?
Yes.
John Barr, thank you so much for sharing your picks and your insights. Thanks, I really appreciate it.